There we go. I should be able to see your comments. So if you are able to comment, mind you, you need to be a subscriber in order to comment. That just helps some of the spam out and also helps out boost up my subscribers a little bit. The more support I have here, the more often I can come to you guys and bring you all the information that I dig up along the way and find those opportunities that we have for investing. There we go. Let me share my screen. All right, so let me bring up NIO here, and that's where we'll start ours today. So NIO in the pre-market is trading under $40 per share, and price-wise, I think that that's an excellent opportunity. They just recently got a price upgrade up to, I believe, $81 for a price target from right now. So 12 months from now, going almost 2x from where it currently sits. Actually, in the pre-market hours, it's over 2x from where it currently sits, and the reason that it's down today is kind of unfortunate, is that autopilot was engaged on NIO, and then that driver who was in that NIO vehicle was in a crash and ended up dying. And that's an unfortunate and a sad thing. And, my heart goes out to the friends and family of that individual, because it is really a sad thing. And I don't want to make the mistake of talking about the investment opportunity and seeing insensitive or callous towards the tragedy that has taken place. This is one of those growing pains that we're going to have for autonomous driving. If this was a person who was driving a car and they were the ones responsible for the control of the vehicle, which with autonomous driving, the person in the driver's seat still is the one who's ultimately responsible. But still, let's just say that this was just a regular old run-of-the-mill vehicle, no autonomous driving or anything, it'd be a sad thing, but it wouldn't be a big news thing. With autopilot engaged, it turns into a big news thing. And so EV companies, car companies that have autonomous driving capabilities tend to be in the spotlight when that sort of things happen. And, that's one of the taboo areas that we have with autonomous driving is, if it's the computer's fault and then there's a tragedy, what about human? And we've seen statistics. I believe Tesla even had to put out some regarding how the safety is very good for their autonomous driving system. And, there's the talk about superiority for autonomous driving and the computers being in control and minimizing that amount of human error. Well, human error is still just that. It's human error. And so then, people like to assign fault and they like to assign blame. And when it comes down to the driver, that, whether it's one vehicle or another, that's one thing. And then we're angry at an individual or we're upset with an individual. We're grieving over an individual. When it is a computer system, and then we can point fingers at a company, then, that fault and blame and fear, all that kind of stuff, anger is going to be directed towards that company. And so what that does in investment terms is it lowers the sentiment on the stock. And then we get the results like we have now with NIO today. So this is a financial channel, and, I'll talk about it in the context of finances. So for NIO, I think that, if we're going to move to autonomous driving, this is not the last case of, these traffic accidents that involve autonomous driving. They're bound to happen, and it's bound to be growing pains, and it's ones that we don't want to face. But is it safer overall? And, how do we answer that question of, who's to blame or who's at fault or who should pay for this? Those are all very difficult things to mitigate and to navigate and to figure out along the way. So if you're still bullish on NIO, or if you are in the first place, or if you're looking for a buying opportunity, a day when it's down is a good day. With that most recent price target of $81, and now mind you, that's just one analyst. Others, I think before was like $64, so that would be over a 50% upside from where they currently sit at around $40 per share in the pre-market. Like I said, trading just under. They're in the 39s at the moment. Here we'll even go down to intraday so that you can see that. There we go. And I'll make sure that I can see your comments here. So feel free to participate in the comments, say hello, talk about stocks, whatever it is, keep it friendly, because we're all here for the same reason. We all want to get our best shot at achieving financial freedom and increasing our financial position. So in good spirits, then let's continue. So with NIO right now, we have that depressed price, and you can see this this deep fall that we have in the RSI. This is on the 30-minute chart, showing a little bit of oversold, and it even bottomed out under 39 in the pre-market hours, down to 38.85. And honestly, like given the right market conditions, we could see a little bit more of a sell-off as soon as the market opens. We'll have to go ahead and watch that. And we'll have to also zoom out if we're going to look at other support levels that we have. I can't see this dropping below the high to mid 30s. They would have to be a really big negative day for EVs overall. So the EV space or high growth space, tech space, if we're talking about going market wide, that's something that could cause downward pressure. If we're talking about company specific news, this isn't a nail in the coffin by any means for NIO. This is one of those necessary evils, I guess that you might want to say. And I don't think that it will change investor sentiment on NIO over the long term, even if today it has a little bit of that jarring effect. And I can tell you, I'm very emotionally impacted by it because I am sensitive to those sort of things. But as an investor, I have to keep my eyes on the long view of this. So NIO, we could get a little bit of a drop today. However, I think that we're going to see large amounts of buying coming in, especially we get down to the mid 30s again for NIO. Here we'll go back out to the daily chart. Good morning, Mamoodle, and good morning, Pyro. So there we'll zoom out a little bit, and you can see this slant line that I have drawn, which really, now that we have a little bit more information, I'll adjust that a little bit. There we go. To be a little bit more along the bottom of those. And today we'll go over where it's at, and then down to like the mid 39s where it seems to be about where it's trading right now. You can see it's falling off. It hasn't quite dropped below this low point that we had back on July 27th. This is a low point for a lot of Chinese stocks, and NIO was definitely no exception to that day. So will we reach that level? That was a pretty big FUD day, fear, uncertainty, and doubt day for the Chinese stocks, and whether or not NIO would be under the same scrutiny as other Chinese companies who have listed on the United States exchanges. So with that could be a pretty good support level for us for NIO today, watching it drop down to the mid 38s. And then, of course, we have the overall market sentiment. Even so, we have this other support level back here, like I said, around the mid 33s. This is 33.93, so like $34 per share. That would be an astounding fall from where it's at, and I just don't see that sort of drop for us in the near future for NIO. If we did fall to those levels, that would be a big buying day for me. And I can only speak for me because this is not financial advice; it is entertainment. I'm not licensed to give financial advice, so take from this what you will. All right, so let's move on from there. Good morning, Jason. Thought on Paysafe after earnings. By the way, you might notice this purple flower behind my ear. My wife and I have an inside story about purple flowers that came from our trip to Barcelona, and she was out for a walk today and saw a purple flower and brought it for me. And I jokingly said, I'll put it behind my ear and wear it for my live stream. And well, there it sits. So whatever, we'll go with it, and we'll just appreciate the fun along the way. All right, so Paysafe. Let's go to the news. See how they're doing here. So, Jason, I don't track Paysafe, but we can take a look at their earnings and take a look at their guidance and see what we have going up. So, beating consensus is always a good thing. Let's actually see if it might be a little bit too soon, but we'll try it out. Let me see. Paysafe to acquire Safety Pay. I did see that. Let's check out Seeking Alpha and see if we see anything. I have some other things to talk about, so if you see those across my tabs, like Digital Turbine, some of the price action that it's seen, I'll talk about that as well. There we go. Okay, so just from the headlines, beats on estimates, which is good, and then it says the outlook is soft. So that could be a reason why we see some of the drop is the forward guidance that we get coming out of Paysafe. If you're bullish on Paysafe, then a big drop like you would have today would be something. And mind you, if the outlook was soft, we could get some decent overselling at first. So sometimes you can catch a bounce, even if it is a dead cat bounce. And that's talking more about a short-term movement on the company rather than taking a long-term position. So let me see. All right. Well, this is back from July 6th, talking about free cash flow. That's something important to check out because if they have a lot of free cash flow, that allows them to reinvest and innovate in their company rather than money that's already promised somewhere else and kind of tying their hands behind their back. Free cash flow is a really good thing. Well, future free cash flow, it says. So it'd be something to pay attention to there. So let's see. Pyro, I don't do a lot of day trading, mostly because my schedule doesn't really allow for day trading. I do long-term investing as the predominant thing, but when opportunity arises, I will take swing trades as well. All right, we'll check out TSP. Yep, and I saw the ARK just recently invested into them. Yeah, we'll take a look at that. All right, so let's see if we have anything coming out of Seeking Alpha here about Paysafe. Also, I want to take a look at the time, 9:30. Ooh, market's open. I will jump right back to Paysafe. I just want to see what we have moving here in the market open. There we go. And I have something running on my computer right here, which is gumming up my resources. So I'm going to have to just keep my fingers crossed. Polkadot's up today. Matic also up today. Matic actually did an acquisition with Hermes. That's actually pretty interesting. Okay, so let's look at Paysafe. I apologize, Jason, for jumping back and forth. So net income of 6.6K. Revenue is up 12.7% year over year. Not bad. They beat by 5.9 million. Company expects Q3 revenue in the range. Okay, so the revenue dropping for quarter three would be a slowing of momentum of the company. And it's also below the consensus of 389. And then the adjusted EBITDA of 95 to 110 million. So 95 to 110 million. Okay. Let me see. For fiscal year 2021, the company expects revenue in the range of 1.53 to 1.55 billion. Okay. Okay. So what I think about the earnings, Jason, now that I've taken just a quick look at this, and what they're talking about for soft is being soft outlook on this one is that based on their own expectations that they don't expect to reach as far as what was in the consensus. So when you look at the price action of the stock, a lot of times what we have is future fundamental value priced into the stock ahead of time. It's sort of like the efficient market idea that everything that can be known about the stock is already priced in, or that is known about the company is already priced into their stock. And so for this, coming out with this softer guidance would take away some of that price and cause a negative price action or a drop in price because some of that future value that's been priced into the stock is not there anymore. So you end up getting a drop out of that. And so we do like to see beats on revenue and beats on earnings, and maybe they'll adjust upward moving forward from here. I just don't know that much about it. And also learning more about what you have for safety pay would definitely be something to know. So if you're going to be a long-term investor, for example, in Paysafe, then you would want to know how their acquisition is going to pan out for them. What's causing them to have soft guidance and what's going to be that next growth factor that they have. So really kind of figuring out the story for them and finding if there is future fundamental strength that's really going to keep inspiring growth is going to be something that turns it around. So let's take a look at Paysafe's chart. This is the daily chart for Paysafe, and you can see it's gapped down considerably from where it was. And somebody asked me to take a look at this last week. And so I remember looking at it. And I apologize for the laggy computer. I'm going to have to check and see what I have running. It could be that I have Moomoo opened as well. I just wanted to show something for that. So when you look at Paysafe, this is the lowest price that it's ever put in. And since its history of being a publicly traded company, so we could bounce back from here. As a matter of fact, I think that we will bounce back from here. I don't know that we'll bounce back completely, but what we have is a gap, and oftentimes gaps stand to be filled. So we want to watch for that to play out. So in the short term, it'll probably bounce. In the long term, we need to look at the future of the company, find out what's keeping them causing the soft guidance, and how they stand to benefit from that acquisition, because they wouldn't do the acquisition unless they thought that there was some business potential there that was going to be a revenue driver for them. So those are just things that I was thinking about, things that you should consider. All right, let me catch up on some of these other ones. Tim wants to know, hi Tim, what do you think of TSP? It is an ARK Invest stock, 13% down in the pre-market. They have been buying since May. There we go. All right, so TuSimple Holdings. So, oh boy, that's another gap down. All right, so the nice thing about ARK Invest being in it, it's not a guarantee that that this is a company that's going to really go to the moon, or that it's going to be successful by any means. They don't know. If they did know, they'd be worth a whole lot more than they are right now, and they'd be trading a whole lot better than they are right now. But what ARK has is a big research team, and they have professional analysts that look into these things and really make a determination about what they think it's worth. And so for them going and buying it heavily, and honestly, what you can do, if TSP is one that you follow and one that you're bullish on, watch the way ARK Invest buys. If they don't touch this dropped price or this depressed price that TSP has today, then you know that there's something that has changed about the company that ARK Invest views as a negative way. If they go and they buy heavy on this because it is a gap down, and that for them, they still see the same or better future fundamental value in the company, they think that they can get bigger returns over the 3 to 5 year time horizon on TuSimple moving forward from here. That's a good clue to you that this is something where they still see the same or better story than what they saw before. If they don't touch this thing, or they start selling off their shares, then something has changed to give them pause, or to cause them to have serious doubts about the future of TuSimple Holdings. So those are just some thoughts that I have on it going forward with the way ARK behaves according to what we see here. So for TuSimple, was recently informed that CFI US initiated a 45-day investigation period in connection with review of its there we go. Review of 2017 transaction. Okay, purchase Thursday. Okay, and the pre-market losers. So not a lot of other information that we have right here. Like I said, if you want to, following the big money, following the institutions, and ARK Invest being one of them, this could be a buying opportunity for them. And like I said, if they take advantage of it, then there's still risk in it. Otherwise it wouldn't. There's risk in everything we do. So there's still risk there. It doesn't guarantee that there's going to be an upside, but it could be just transient FUD that we have here that'll pass. All right. So RMO will report earnings after close. Victor, I know that this is a recurring one. I'm not sure if it's you who is bullish on Romeo, but this is one that we today are down below support. As a matter of fact, let me just take a quick look, see what our markets are doing. NASDAQ is down about 0.5%, S&P down about 0.5%, Dow Jones sitting about even. Okay. So when I was looking through my scanners today, I noticed that a lot of stocks were down. So some of it could be macro related. And then, for some other ones, there could be individual news about them that's causing the drop that we have. So those earnings that we watch, this could be a volatile time for Romeo. So Romeo needs to set a bounce to see a bounce off support. Absolutely, I agree with what Benzinga says here. Instead of bouncing off support, they actually broke support, and now they're trading under it. So now we have no support for the price, at least according to the candlesticks that we have here. We've put in a new low point, I believe, since Romeo became a publicly traded company. So from here, we're in uncharted territory. Earnings could be something that, if it does turn out positive and they have an excellent future outlook, this thing could turn around. If it tells a story where their outlook is soft, like we saw with Paysafe, and if they disappoint on earnings, then those are things that could cause it to drop even further. We just I don't follow it enough to really know what to expect for Romeo moving forward. Analyst estimates on this, we got 5 covering it $7, the low price target, up to 18 is the high, 12 is the average. So it is trading relatively cheaply compared to the analyst estimates that we have that underperform. Let me see, 5 analysts, so 20%. I need to get my eyes checked. That one analyst that we have at the underperform, I think, put it at $7, which would still give it a reasonable upside from where it actually currently sits right now to get back up to that. But like I said, we are in uncharted territory with Romeo. All right. Good morning, Darren. UK investor here again. HITI in the cannabis sector is doing well. You have time to look into it, be appreciated. No problem. So there we go. Is high tide? Yeah. So I know of a lot of the different cannabis stocks and watch them move. Well, technically speaking, I mean, we got an excellent looking 200-day. We're trading above it, which is excellent. We could see it sort of dancing around support and resistance, sort of coiling itself around the 200-day. Recently broke above the 50-day, which is awesome. We have good volume back here on 8/13, so that was Friday. And now we opened today. We're currently sitting at a support level on the 50 period that we have. So I know that high tide is the one that people are a little bit more excited about. We have 2 analysts covering it. One says going up about 2x from here, a little over 2x from here, up to about $16 a share. Says $15.98, and then $17.98 for the high analyst estimate on this one. In the news, high tide closed acquisition of leading online retailer Dank Shop or Dank Stop. Okay, got it. Yeah. So a lot of times in my Discord and with my Patreon group, I actually defer to somebody who follows cannabis stocks a little bit more to give me a little bit more of a beat on the cannabis sector because I don't really follow it all that much. They tend to know a little bit more about the bigger stocks where cannabis is concerned. You know, so for me, Sundial is one that just moves a lot, even though it's a smaller play. Tilray is out there. I think Alpha, I think they merged with them. And I'm not really, what was the other one? I'm really blanking on it right now. But this is excellent price action. And we have volume supported price action, as a matter of fact, which is a really good indicator. It doesn't mean that it's going to happen, but it's a good indicator that we could hold at support today, given that we had such high volume back here on the 13th. And cannabis is going to continue to just be volatile for a long time. And let's see where our support levels are at. Down here, just under $5 per share. Really, news of legalization profitability is going to be huge. The United States is just a tricky place. I think that we have different state legalizations, but we don't have anything at the federal level. I'm not sure exactly where, if it's still listed as was it Schedule 1 narcotic? I'd have to go through and look at it. This isn't a sector that I cover, but given the price action that we have, there's a couple things happening here. One is that we did break up above resistance, so now we're sitting at support. Another thing happening is that we still are trending downward off the highs. We still have a fairly linear drop coming down here, and across the lows, we've sort of stopped following this linear downward trend, and we finally got a higher low. So the next thing here is to keep those lows moving upward, so that way we get more higher lows. And really breaking over the $9 mark is going to be absolutely huge in terms of seeing an actual full reversal for the trend that we have right now. I don't know what it will take, what the catalysts are. Legalization is going to be a big one, adoption, and there's a lot of competition in the cannabis space as well. So how is high tide compared to its peers, its competitors, and where does it stand to dominate in the market where the other ones don't have that same opportunity? All right, Jason, thank you. In this long the pre-market different, nice. All right, nice work, Jason, and yeah, I hope that works out for you. Tim, okay, great, makes sense. Darren, thanks, Doctor. No problem. All right, so I want to check on my friend Digital Turbine. So I talked about NIO, and I felt like that was one that needed to be addressed because I absolutely love NIO. I'm in it for long term. This is another one. This is Digital Turbine, APPS. Apps is the ticker symbol for it. And just having a rough time recently. And we had support holding in the high 50s, and then we broke that, and now we're hitting support. We're at the pretty much the last key support we have. If we break here, we have a big drop in order to find more support following from there. So we had sell-off in high growth and tech, and you can see that some of that happening, but it didn't really happen in so much as big a way as it did for other companies. This is more of a 30 to 40, where some saw 40 to 50, so it's still pretty big. But we did rally pretty strongly from that, and then since the beginning of July, end of June, we started trailing off again. And the most recent drop that we had, starting on 8/10 was the day. Let me zoom in so we can see that candle a little bit better. We have this big red candle, and it's funny that we didn't really see a lot of reasons come out as to why. And their earnings came out, and their earnings were good. They beat the revenue, they beat the earnings, and they have a strong outlook moving forward into the third quarter of 2021. And yet we have negative price action anyway. So what in the world happened that we get this negative price action? And I couldn't quite wrap my head around why we were seeing the drop. I couldn't find specific news on it, and then I happened to come across an article that talks about this. Now, mind you, Digital Turbine makes its cash from doing advertisements and business with companies, getting people to download their apps. And I'm sorry for the way this is displaying. I'm not going to be here long. It says Android users, Google Play Store is changing in a big way. And the thing is, as the users on the Google Play Store, you're almost not going to notice a difference. You'll get some faster download times because you have smaller apps. But really, it's going to be pretty much the same experience for the users on the Google Play Store, even though it is changing in a big way. This is a change that got put in back in 2018. It mentions it down here, and I'll talk about it in just a moment. However, just this August, around August the 10th is when this came out. They made it mandatory, Google did, that any new apps going on the Google Play Store need to be uploaded using AAB versus APK. So what AAB is an Android app bundle, I believe is what it stands for. And even though I blank sometimes on these acronyms, I can tell you what it is. Basically, it goes up in a bundle that the user, when they download to their specific device, so let's say that you have the brand new Samsung phone, you're only downloading the part that's for that specific phone. So there's not as much download time, which is pretty quick anyway, but it also takes up less space on your device. And really for older phones, older generations, it makes even more sense when space is more limited, speeds weren't nearly as fast. If data is a big concern to you, it won't take as much data versus the APK. Now in the Android package, which is APK, what that did was the developers had to take into account a lot of different phones by a lot of different developers with a lot of different screen sizes and resolutions and other different settings, and they had to package that all together. And so when you were downloading for your brand new Samsung phone, you were also downloading for all other phones that would use any sort of compatibility measures for other devices besides just your own. So some of this came back on Digital Turbine, the stock market implication came back on Digital Turbine, and Digital Turbine came back with a statement. They're like, we already knew about this. We dealt with this back in 2018 and 2019, and it in no way impacts our business model. So I'll zoom in here, and this is from Digital Turbine's website. It says, good news for the industry, including developers, users, developers, telcos, and Digital Turbine. So last week, Google announced timing for a change to Play developers. And again, this is the change. It's for the developers, not really for the users. You're going to have the same experience that you've always had, just with smaller download times and also smaller file size allocation or smaller file sizes for the apps that you put on your device anyway. So you probably won't even notice the difference. So the Android app bundle, there it is, your AAB format. It says that the news was shared back in 2018 and that Digital Turbine launched the support for it in 2019. It's already done. It's been done for like 2 years. And so it says, today we are currently distributing Android app bundles with many of our advertising partners across all our on-device products, such as single tap, dynamic installs, wizards, notifications, and more. And then down here, this is what you need to pay attention to. For Digital Turbine, there is no impact to our customers or partners. And even though there's no impact, this isn't widely received when you look at the stock market here. This is something that instead that change went through, and it was like, oh gosh, now not everybody's going to receive the same service. They're not going to have the apps on their devices. The developers weren't prepared for this. They're blindsided. As a matter of fact, we're already back up to almost $56 per share. And this thing opened at 53.02, which I think might be, it is. It's exactly even with this low point that we had back here on May the 11th. So we tagged support, and now we're back up from here. So before I was on my live stream, I went into my Discord, told everyone what I was checking out today. I said that I was checking out the Chinese EVs. I said that I was checking out Tesla. Digital Turbine was another one that I said that I was checking out. And the reason that I was checking them out is that we should absolutely recover from here and continue our trajectory towards that 12-month price target of $107 per share. And this is one of my favorites out of the growth companies that are out there to give us those big returns, given its current price action. And from where we opened today, or where we're at in the pre-market, it was pretty much a 2x opportunity. As a matter of fact, still, according to the average analyst estimate on this one, we're still almost at that 2x opportunity. So let me close out that page. Let's go to tip ranks here for Digital Turbine. So currently trading at 55.53, $107, representing almost a 90, or just over a 92% upside. So I've talked about this several times. I got asked what my favorite stocks were, or stock. It was individual, singular, favorite stock. NIO happens to be number one because I think that they're going to be a monster. And Digital Turbine happened to just be a very close second. I don't think that they're going to be the same monster as NIO. I don't know that it'll return the same multiples over even longer time horizons. This is one that for at least the next year we'll be checking out. And I think that they will absolutely continue from their current price now. I think that we're going to start seeing that upward march from here. I don't think we're going to break that low of 53.02 unless something big changes about the company. As a matter of fact, look at that price support wall we have at 55.27. Compared to the sell side pressure, which just is non-existent. I think that we're going to be doing all right from here in the short term. And in the long term, I think we'll be back up into the 60s very soon. And I think that we'll see much stronger price action rotating into the end of 2022 and into the beginning of end of 2021 and into the beginning of 2022. I'm going to sip my coffee. All right. Brooks says, good morning, Brooke. Have you ever checked out Aero? I believe I have. Maybe once. There we go. Consumer signals. Yep. Okay. Design and manufacturer of purpose-built automotive grade electric vehicles. Company CB include. Yep. I have checked out this company. It's been a while. Inline seating and 4-door access, professional and personal use company. All right. So I'd have to familiarize myself with them. Trading volumes are relatively low, being in the thousands, tens of thousands, it looks like we have. And then during the pre-market hours, very low volume from there. So at least as far as momentum goes, we haven't really seen a lot of momentum. When was this back here? Is this January? This was February. So they peaked out at about $11.50 in February and since have just continue to trail off here. So this would be one that I would be looking forward for what their next big catalyst is. So if this is one that I was like, man, these guys should be doing pretty well and they're just not doing so well. What's keeping them down? What's keeping the excitement out of it? Why is the momentum gone from this thing? And what is it going to take to bring that interest and that momentum back and reverse this trend that it's currently on? Right now, I'm not seeing any sign of any sort of reversal. It doesn't mean that one's not coming, but it would be catalyst based. It'd be news based. If this is status quo, then this would likely, being that it's near a support level now, it'll likely just trade sideways. We could see dips to the downside if there's negative stuff. We could see jumps to the upside if there's positive stuff. But really, if we want to know if we have a shot with this company, it would be based off their fundamentals, how soon they're looking at profitability, what's their total addressable market, what sort of competition are they up against? I mean, the EV space is just going to be enormously competitive. It's going to be full of mergers and acquisitions, and it's also going to have some some bankrupt companies. So going for the leaders is always a big thing. Arcimoto, I've seen advertisements. They seem to be, from the sounds of what I just read about Arrow from their company profile, it sounds like Arcimoto could be sort of taking up some of that same space. So they could be competing for the same niche. Without looking even more, I don't know. But just at a glance, those would be things that I'd be looking for moving forward from here. Is that what will it take in order for them to reverse the trend that they're currently on? And are they pre-production? Are they currently in production? Do they have any deliveries? What's the demand for their product? Those would be questions that I would seek to ask in order to find out what comes next for this company. All right. So Victor wants to know about PRTA. There we go. Prothena core. Oh, Prothena. I said it wrong. Prothena. All right. So, good to average down. Okay. So, Victor, I can't give any financial advice. So I want to be upfront about that before I say whatever I say next. Absolutely not licensed. Entertainment purposes only. I can talk about my own perspective and what I would do, so I can give a hypothetical situation for myself. So looking at this one, if I didn't have a position, so absolutely, and I don't have a position because I don't know the company, but if I didn't have a position, today would not be that day that I would start the position without knowing something significant that would make me think that this was going up from here. And the reason is that we're sitting right across a pretty solid resistance at the moment. So being just under $60 per share. So at least as far as a long-term trade, I don't know what the upside is from here. I don't know the company outlook. Just looking at technically what we see on the chart, we are sitting near resistance. And so buying today wouldn't give me much of an upside for like a short-term swing trade. Fundamental value is different. So we need to be careful about that one. Now, as far as like even a range trade, this thing looks like it can drop down to the mid 40s before going back up to about $60. So that's a 30% swing from bottom to top. You can look and see what kind of news is affecting this company. Let's see what they do. So healthcare, pharmaceuticals, biotech, and medical research. Okay. So according to the analyst estimates, this is another thing to look at because this would be more of a long-term time horizon that we have. We're sitting near the low. The low is 57 out of 8 analysts covering it. Half of them call it a strong buy. 3 more call it a buy. So that means that we have just one saying that it's a hold. And so we have up to $82 for that analyst estimate. Let's look how recent they are. Good morning, Polly. Absolutely, people of Afghanistan, definitely on my mind. Thinking about it, hopefully that is something that that somehow peace is found. I just don't know enough about either side to even comment on it. It's a tricky and terrible thing. When beliefs are involved, beliefs are very powerful things for human motivation. And it can motivate us to do very good things. It can motivate us to do very terrible things. And, what one person sees as good could be terrible to another person. So we'll hope that things get settled soon. And I want to move on from there. So PRTA, I think I already clicked on it. There we go. All right, so we have Prothena here, 67.38, so 17% upside. So from where it's trading at now at 57, so a decent upside for a long-term point of view. Citigroup 72.59. These are all buy ratings. Bank of America was 2 months ago at the hold. Okay. 65, 72, 59, 75, 75, 82. The most recent ones, RBC Capital coming in at 59. Well, there's 72. We'll put that in for within the last month. So there could be a decent upside here. If I track the company, I would know more. Do they have any news right now? Okay, we got up 155% in 3 months, so we can look left. So we can see they have made quite a run recently into these higher price levels, and they could still push further up. And so it's a red day, so DCAing today on a red day, that would be a day that if I already had a position and I wanted to keep dollar cost averaging over time, I would much rather do it on a red day than a green day. So if I was, before when I was speaking, I was talking about initiating a position, because one thing that I don't want to do is buy right into resistance, because if it's near resistance, there's a possibility that it could drop and give me a better buy-in time. So this back on the 12th, which is Thursday, would have been a worse day than today, because it was green, it was up, and it was right up against resistance. Here we're down a little bit from resistance, and if it's a long-term play and your dollar cost averaging over time, why not on a red day? So it wouldn't be the worst thing, in my opinion, and these are just my own personal opinions and just reflecting on them. And be much better than buying on a strong green day, like back here on the 6th. I'm sorry, the 7th of June. That would have been a much harder time for me to buy in, because I would be afraid of buying in at the top when I could be getting a better deal. But I mean, look at the market timing, and that's why they say market timing is difficult, and that's why they say dollar cost averaging is one of the best strategies that you can have over the long term for investing. It also helps because if you are a long-term investor, then you're not paying all those taxes on short-term gains, and you can experience long-term growth as well, and compounding. Let's see what else we got. Let me see. ETH up 186% since June. Excellent, Pyro. All right, so it is 10 o'clock. Let's check in with our crypto markets. We'll stop by Bitcoin. So Bitcoin, this is excellent for price action. We made it up over 48,000 on the daily charts, and that was on Saturday that we just peaked over 48,000. So at least we know where that next resistance is. Right now, the high 47s into 48,000. We're probably getting around number resist right around that point in time. And you can see the lines that I have drawn on here that we've actually broken over that resistance area. So let me see if I can change my scale so I can actually read it. I'll just put my cursor on it here and be able to read it better. So around that 47,000, and we're able to break that. And honestly, it sort of is acting as support right now, right around 47,000. This 200 period could be a better indicator that we have for support, which is around 45.5. So if we do fall significantly below 47, right now we're at about 46.5. We have room to go down about another $1,000 from where we currently sit. And I think that we'll keep finding that 200-day is going to be really strong support for us as we move forward with Bitcoin's price during the short term. And I think that we're going to curve back towards that stock to flow model in the over the next few months, that we're going to see incredible price action in crypto overall. And Bitcoin being the #1 by market cap certainly isn't any exception to that. Let's stop by Ethereum. There we go. Ethereum, they popped up over 3,300. And you can see I have my resistance line there as well. And I don't have anything drawn up above that resistance line. Let me zoom out a little bit more, because up above that resistance line, we're not completely uncharted. We just don't really have any stops along the way until we get up to that 43.83. So really finding round numbers in there, so like 3,500, 4,000, those could be stopping points for us along the way. We have a really nice bullish flag pattern coming out here, and it's okay if it dances around resistance for a little bit of time, at least from a long-term point of view. A lot of analyst estimates are coming out for this, and very few of them are bearish reports. So most of them come around, talking about back to 40,000, my goodness, $4,000 end of 2021, 4,700 end of 2021, $5,000 by the end of 2021. Almost none of them are talking about dropping back down from there. Cardano, let's go to CoinMarketCap for, there we go. I was also looking out at Chainlink and Aave. So absolutely wonderful. Talk about institutions more easily accessing these things. And I'll get back to that story if we get time. It is after 10 o'clock. I always aim to end at 10. So anything after 10 is a bonus. Cardano up to almost 5 billion by market cap. their smart contracts. Mind you, they're up over the $2 mark, which is awesome for Cardano. This will be loading here in a moment. You know, with the smart contracts out and with watching that performance and their scalability play out over time, and the fact that it is research back and it's considered to be absolutely beautiful programming that powers Cardano, we could see that price action really play out in a big way and take us up to that $3 mark, which would be what, about a $7.5 billion market cap. Sometime in the, I'd say, end of 2021, if Cardano keeps on moving on in favor, and as we have more adoption to Cardano with the smart contracts as well, I think we're going to overtake this previous high that we had back here of, let me see, make sure I'm on the right candle. $2.47. We are gearing up right now after this rampant run that we've had for Cardano. We have a battle going on, and right now we have just ever so slightly. Let me zoom in a little bit more so you guys can see better. Even off the wicks of the candles, look at the highs and the lows that we have, that they're sort of squeezing in towards each other. This will break one way or the other over the next few days, most likely. So after this sort of run, we need a little bit of a resting period. And then there's going to be, you know, doubt about just how high it can climb. You know, is it going to break that $2.25? If it does, we have a lot of room. We have room for another 25 cents over resistance almost in order to get us up to the peak of this candle. And if we break up above that, then we're not uncharted territory. This is an incredible run for Cardano. We don't see that big of a recovery for Bitcoin or Ethereum. It just hasn't returned in such a large way. So Cardano, I would definitely keep it on your radar. You can see the strong support it has down near $1. That'd be, you know, over a 50% loss from where it's at right now. If this does retrace, let me see, from $1 up to $2.12. So what's that? 56 cents down from there. So about $1.56. So all the way down here would be where you'd find that retracement level. If we stay above that, we're still in good shape for our run. We actually want to stay a little bit higher. Hopefully we find a nice round number support right around $2. If it does come back to this level right here at about $1.90 even, and then get a bounce off of that ceiling, which is now the floor, since we're up above resistance, it can now act as a sort of support for us, where we find a little bit more of a zone in there to reload and to fire away again. So that's Cardano. Let me bring up Polygon. There you go. There we go. All right. Hello, Lee's V Gang. Good to have you. Good afternoon to you, my friend. Would it be advisable to take, and Daniel wants to know, hello, Daniel, would it be advisable to take a position with Cardano at this point? Well, I can't advise anything. Cardano, I think, is going to be a major competitor over time. I think that they're going to do very well. When I see something that has run up as high as it is, it makes me hesitant, because a quick run up could also mean a quick fall. So if you're going for a big gain, that could also be a big risk. So if I were to initiate a position on something that has run up as much as Cardano has recently, I would start small and dollar cost average over time. That's what I would do for myself, because I can't speak for anybody else. I only speak for me. This is for entertainment purposes only. But if I were to take 10% of my total portfolio and just go throw the entire 10% at it right now, into Cardano when it's run up so much, I feel like I would be putting myself at a large risk. I could stand to gain, you know, to even, let me see, we go up to $3. So go up about 50% on that 10%, which would, you know, be amazing. But then we could also stand, as I showed with that strong support at $1, and we could stand to lose 50% and fall back down to $1. And that would feel very horrible. So I don't like to invest in ways that causes me to feel sick or to lose sleep at night. Instead, I would rather do to take small little steps that we have. The tech and high growth sell-off was stomach wrenching enough that I certainly wouldn't put all in one place. But Cardano, I can see establishing itself as one of the leaders in the crypto space And I think there's a lot of promise that goes with it. And I think that they're going to make good on a lot of those promises. Polygon, let me get to the news here for Polygon. So this is a layer 2 solution that we have, a layer 2 scaling solution for Ethereum. So help out with some of that. Let me see. Give me one moment here. Ooh, that's interesting. I'm going to have to see if I can find it right now. We have news on Polygon, Hermes. There you go. This is from 2 days ago. And you can see in some of the headlines, it's, there we go. Polygon merges with Hermes Network and $250 million a deal. This is the first complete merger of one blockchain network into another. So we just recently saw the acquisition of, well, not the acquisition, but news of the pending acquisition with GNOG by DraftKings. So that sort of thing in the gambling industry is something that's expected to keep happening. So RSI, Rush Street Interactive, is also one that's considered an acquisition target because it's a smaller company with a pretty large customer base, and it's seen some pretty positive price action as a result. So crypto, there are a lot of smaller tokens out there that might actually have some pretty niche uses that might actually really fill out over time. So seeing that this is the first complete merger of one blockchain network into another, I definitely don't think it's the last one. I think that there's going to be other ones, and this might be something to actually consider for a while. Where else that might happen, and how, as investors or traders in cryptocurrencies, we could watch that take place and also capitalize on it. So Polygon, a layer 2 platform on the Ethereum blockchain, is merging with roll-up platform Hermes Network in a $250 million Matic deal. The acquisition was worth about $250 million based on Matic's price on August the 4th when the deal was struck. Hermes will be absorbed into Polygon ecosystem under the name Polygon Hermes, where it will become part of Polygon's line of products, including Polygon SDK and Polygon Avail. The entire Hermes project, its employees, technology, and native HEZ token, which holders will be able to exchange at a rate of 3.5 Matic to every one. What do they call it? Hez? I don't know. Be nice if they had a little wallet that had a flip top on it and be a Hez dispenser. Let me see. I am a father of 2, by the way, so the dad jokes, they happen and none of them are good. If you don't groan or get a little bit sick over them, is it really a dad joke? All right. So Polygon's merger with Hermes is the first complete merger of one blockchain network into another. So you can keep reading this. This one, this article, all I did was typed in Polygon Hermes, HERMEZ, and this came up on CoinDesk, but there's going to be other ones that report on it as well. And so the roll-up solutions, basically, they bundle together transactions, they roll them up together, and then put them through as a single transaction. And what that does is it lowers gas fees and transaction costs. And so it also reduces congestion within the Ethereum network, so which will mitigate gas fees overall. So those are things to consider. Speaking of gas fees, I keep this up for my live streams for Watch the Burn. And I put this up here so we can see just how much Ethereum has been burned since the London hard fork took place. I believe it was August the 5th. We're getting far enough away from it now that I start to forget exactly when it happened, but I believe it was August the 5th. If that was a Thursday, then we're in good shape. I think the time was 8:37. You can see here, 52,000 ETH have been burned since then, and the net issuance has been just shy of 100,000. So if we double 50, we get 100,000. So over half of what has been issued in rewards has been cut down from that, and you can see the net reduction coming out to that 35%. So this is on watchtheburn.com. You can go and you can check it out. This right here is showing that the issuance. We can see the base fee. The orange is the base fee, and the yellow is the priority fee that we have. There we go. And then you can also see the rewards that were put out and the tips that were put out on top of it. And there are the gas fees. And you can see this is very spiky from going about, it looks like 8,000 Gwei or 8 Gwei up to 32,000 from there. We can see the current base fee, 71, is actually pretty high. That's a lot of congestion that we see, relatively speaking, because this has been in the 30s to 50s recently, and now it's moving up to about 64. There's another one that you can look at And this is on etherchain.org/burn, and it just gives you a different view and a different look. And I wanted to bring this up here because you can see, and I think this one updates a little bit better than Watch the Burn does, that it's a little bit more real time. But over 52,000 burned. We are closing in on $200 million worth of Ether that has been burned away. We currently have about 117 million Ether tokens right now on the Ethereum network. And we still have ETH 2.0 that hasn't hit yet, where we bring in proof of stake, which should get rid of some of the selling pressure, which should give us bullish price action overall. And also when we get the optimization that comes through from sharding, where we get better scaling for it, that should also be something very bullish for us. Speaking of scaling and being able to put through more transactions per second, Solana is absolutely getting some of that attention recently. Looks like I left CoinMarketCap. Solana, super fast. And if it's able to keep up with the current financial payment system that we have, there you go, then it could easily be one of choice. And I believe that this 36% up that we see is within the last 24 hours, or that this is today's amount that we're up, and it currently has a market cap of $18 billion. Well, now just 19 billion. It just jumped again. It went up to 40% with this latest refresh. And this one, even just looking at this chart, we can see a much bigger ramp up that here, and this would have big DeFi implications moving forward for Solana. And then I also mentioned Chainlink. Chainlink is also a big one that we have because it's an oracle where it brings in real world data into the blockchain area. And they're also up incredibly over the past few weeks. Solana putting in a new high, higher than was back in May. So this run is absolutely incredible. No problem, Daniel. All right, let me jump to the trading view quickly. There we go. Wow, check that out. There we go. So I believe Solana gets its efficiency because it has a central data storage. I believe that part's centralized, and I believe that people who are doing the confirmation for the transactions, the proof of consensus, I believe they use proof of consensus for their security in order to secure their blockchain. I believe that they only get pieces of that blockchain rather than having to download the entire thing and keeping up live updates of the entire blockchain. I think that Solana is the one that uses only pieces of it at a time. As a matter of fact, they might be proof of history. Does it say down here? Let's see. Yep, there you go. The Solana protocol is designed to facilitate decentralized application creation, aimed to improve scalability by introducing proof of history consensus combined with underlying proof of stake consensus blockchain. And this hybrid model that they use is allowing them to be hands down just the fastest. As a matter of fact, I think that they're capable of scaling up beyond what current technology allows, that they're waiting for better technologies in order to utilize the full potential of the Solana network. So I don't think that this is one that should be counted out either. This gets referred to a lot as the Ethereum killer. I don't know if that's the case. It could be that difference between proof of history and the idea of decentralization could be something that could be limiting for them over time, but it's absolutely seeing wonderful price action right now. All right, let's jump back to the stock market. And I mentioned one other company to the people in my Discord, which, by the way, that link to my Patreon is down in the description, as well as the referral links. If you want any free stocks from Webull, you can sign up and deposit your cash and get 2 free stocks there. And then you can get 4 free stocks, up to 4 free stocks, I should say, with Moomoo, which is a new investing platform from Futu out of China. Gives you exposure to foreign markets, including the Hong Kong exchange. So you can most definitely check that out. And I really like their platform. I'm still learning about how to use it. I'll show it to you here in just a moment. I'll show you one of the features that I really like about it. So NNDM is really having a rough time. 539 is where they bottomed out back on May the 13th, where a lot of other companies did. And we are currently near that at 561. their market cap, when I checked it this morning, was something like 1.4 billion, which is almost entirely covered by their cash position of about 1.3 billion that they last reported having that cash. And I'm not really too sure on their debt. And I know that Yoav Stern was waiting for the end of the pandemic to really start moving into full commercial mode for pumping their Dragonfly technology and really getting it out there in their services and their inks and everything, getting the revenue streams up and running. So right now they're tiny. They don't make a whole lot of revenue. It's huge amounts of risk. Given their cash position, a lot of the risk is out, especially under that $6 per share. And I'm highly considering two things. One that I'm considering is just outright taking a little bit more of a position on NNDM. I do have a little bit of an overweight position already in my portfolio, but at these prices, it's kind of hard. Even if I make that other portion a swing trade rather than a long-term position, for me, it's hard to give up these prices because I think we're going to rebound from here. We'll bounce back up to that $6 mark within the very near future. So that would be it'd be another 40 cents up. So 8% up from where we're at now. So that'd be a pretty quick turnaround on that cash. So this is one of my favorite ones. The other thing that I was considering doing is selling the $5 put option. I don't think we're going to touch that $5 mark. So basically I get cash for selling the put. If we do hit $5, then I have to, of course, buy 100 shares for $5 a piece. So that would be a $500 investment just for buying one of the, or for selling one of those puts. If I get assigned in order to buy them as the seller. So the seller of the option, it gets assigned and the buyer is the one who exercises. So if the person who bought that put option that I sold, if they were to exercise their option to sell me those 100 shares at $5, then I'd be assigned to buy them. I'd have to buy them. And it would cost me $500 per contract in order to make that happen. And it would be mitigated somewhat because I didn't look at the price here. Let's bring up options. There we go. And puts. So right now, selling a put would get you per contract $16 to sell that $5 put. So you'd possibly have to spend $500 per contract if you got assigned. And this is one that expires on August the 20th, which is 4 days from now. So I could easily make, just for one of them, $16 just for selling that put, possibly having to buy $500 worth because 100 per shares per contract. But honestly, I think I just have that $16. I'm very confident that I would have just that $16 and not have to spend another cent on this. So depending on what size of a portfolio you have, what your cash position is, you typically need that cash in order to cover it, or at least the buying power. You know, you got to be careful because with options, things can go sideways real quickly given the right risk. If something happened and they dropped down to 250, well, then you'd be out a whole ton of money because you just paid $5 for something that then cost $2.50, for example. But given this price here, you know, it's definitely something that I'm considering, either dollar cost averaging or selling the put, taking the cash, and, you know, possibly having to take a stronger position or a bigger position at $5 per share. All right, so that's the thoughts on NNDM. Let's see what else we have moving in the pre-market this morning. All right, wow, Xpung's down to 37, NIO's down to 38, ChargePoint down to 22. Tesla's back under 700 there. There you go. I think that they might be getting investigated. Let me see. Department of Justice U.S. Auto Safety Regulator probing Tesla's autopilot highlights safety concerns. ESG insight. So that's just going to keep on happening with anything autopilot. It is new. It's taboo because when there are accidents, who do you blame? Do you blame the computer system and the company, you know, or is it enough that that overall it's safer and it mitigates, you know, the human error factor, you know, which is something that'll build out over time. You know, what's the right answer there? And because it is tricky to kind of go back and forth, because some people would clearly say just like humans do it. Well, then there's human error. Just like the computers do it. Well, what if the computer screws up? And that debate's just going to go back and forth. And when it comes out in big ways, against the computers or against the companies who put out the vehicles that use those computers, we're just going to see negative price action. And I believe that, along with other macroeconomic effects that we have, such as slower economic recovery in China, are just things that are going to continue to cause these negative impacts, that we're not reaching those growth numbers as quickly as we had anticipated, and these other headwinds that we have. All right. Where's our friend SoFi? Oh my gosh. There we go. SoFi is back down under 15. Wow. So they had a nice little run up from, I think this is around the high 15s that we have right here. Still not sure why my computer's running as slow as it is, but it is. And we've actually dropped back down into the low 14s, which we haven't seen for a while. We saw that back on May the 13th. There we go. And we're close to that low today. That low price today coming in at 418. So 4 cents up above the low that we hit at the peak sell-off. So lots of negativity, it sounds like, surrounding SoFi. So SEC Holdings takes share stake in Intel, cut Microsoft. SoFi in good financial standing, coming from tip ranks 23 hours ago. SoFi Tech plummets following Q2 print, options traders buy the dip. No, that's not a bad thing. There we are. So if we look at the options for SoFi, so this would be another one of those cases. If you can buy the stock outright, and then it could keep falling. You can look at some of these puts that we have. Selling a put is a bullish action, because basically you think that you have the chance that the stock drops down to a price that you're willing to buy it at. So let's say that you feel like this stock is going to go back up to $20 per share, and you would be willing to pay $13 in order for that to happen. Where there's that $13 put that you have that you could sell. That you could buy the stock at that $13, and then you would have, close to a 50% upside up to that $20 that we have. So you would get $11 per contract for selling that. And what that would do is it actually lowers the amount that you're paying by 11 cents per share. So it'd be $12.89 would be your cost basis per contract, given the price that's right here rather than that $13. So you'd actually be giving yourself an even deeper discount. And it's not all sunshine and rainbows with options. You are increasing your exposure to risk when you go with options, but there are very safe ways. I don't want to make it sound like, there's only big money to be made with no risk. There's big money to be made, so there's big money to be lost. So please keep that in mind. All right. Well, it is very late. It is 10:26. So I'm 26 minutes over my time. I'm going to wrap things up for the day. I want to thank you guys for stopping by. Check out those referral links. Check out my Patreon. It's all down there in the description. Thank you so much for all your comments and your support, and we'll see you guys tomorrow. Have a great day.